Welcome back to Butler on Business. Right now on the phone, we have Mr. Tim Travis from ttcapitalonline.com. Again, that's ttcapitalonline.com, your one-stop source for all investment advice and money management services. Mr. Travis, how are you today?
Hey, I'm doing great. Thanks so much for having me. I appreciate it.
Tim, it's good to have you back. Now, you're calling us live from Orange County, California.
That's correct. Yeah. How's the weather out there for you guys?
All right, don't rub it in. It's your weather is perfect almost always.
Yeah, it's been pretty nice, no doubt about that.
It was 44 degrees this morning. We're supposed to heat up into the mid 60s, and then we'll be back into the 70s with you guys. But I remember a couple of years ago, I was out there with a business partner of mine, and it was below freezing and freezing all over America, and he and I were running around in shorts.
Right. No, I hear you. That's definitely how it is.
Although you do now have to take a jacket with you at night.
Yes, absolutely.
Tim, now you describe yourself as a deep value investor with the S&P up here at 1412, at least Friday afternoon of last week. Is there much deep value out there right now?
You know what? Surprisingly, there is. But I don't think that value is in the overall market, so I'd be real careful in most mutual funds and things like that. We think that it's really a stock picker's market. So certain areas of the market, like financials, for instance, and some of the energy companies are showing, very low multiples on earnings and book value, while other areas of the market, some of the higher dividend payers or the consumer staple stocks, they look a little pricey to us at these levels.
What do you think is going to happen on Election Day and thereafter?
Oh, that's the million-dollar question. There's no doubt about that. I think it's probably, 60-40 Obama, I would imagine. I think that, that might be a little...
what I meant, not, excuse me for interrupting, not who was going to win, what's going to happen to the market?
Well, I think that who wins kind of, will have a pretty big impact on what happens with the market. I think that the market would appreciate Romney winning. I think that people have a assumption that Obama's policies aren't as business favorable, and I think that might be a reason for a short-term sell-off. But I don't think you should bet on that either way. I don't think there's a real good way to make money on that.
4 years ago, Election Day, is when we began that final descent down to cutting the market in half.
Right.
And I am concerned for those long in the market that is, in fact, what very, very well may transpire this time around. I've got a chart up looking at it. My concern is, the politicians, they just hope to survive from election to election.
Right.
And then once they have survived or gone down in flames, then we begin to get the real story. And they get all the bad news out of the way in time for us to forget about it before they're up for election again.
I don't disagree with any points that you've made there, and I think that obviously everyone's talking about the fiscal cliff. That's a concern. But I think that the situation's pretty different than it was then. I mean, at that point in time, you had credit markets that were virtually completely frozen up, and the financial system was had little or no equity because it hadn't been recapitalized yet. I think that, we have a much stronger financial system now. The banks have more capital and better balance sheets than they've had in literally decades.
But on the other hand, though, during that same period of time, the net worth of an average American has declined 40%.
Without a doubt. And we're just, we saw the home price numbers today, and they showed a little bit of strength. So I think that that's going in the right direction. I think you've seen consumers deleverage somewhat. I don't think that it's a really rosy outlook for U.S. growth. Don't get me wrong. I think that we're looking at, 1 to 2% GDP growth, and, inflation is a big risk that's out there somewhere. But I don't see that huge sell-off. 10% sell-off, that's well within reason. But I don't think we're going to see what we saw in 2009. That's just my opinion, though.
Okay, well, given your premise then, I would be curious to know how best to navigate up here at 1412. I know it's a market of stocks, not a stock market. So you do well as a stock picker as opposed to buying ETFs or broad basket mutual funds. You mentioned you like financials.
Correct.
And that you're leery of the consumer staples or the cyclicals.
Right, and that's just purely a reflection on valuation. So if you look at financials, these are companies that most people just still hate. They just have a terrible connotation with the crisis of 4 years ago. But you've got stocks like Citigroup and Bank of America that are trading at large discounts to tangible book value. They're trading at less than 70% of tangible book value or liquidation value. And these are companies, especially, in Citigroup's case, that are very profitable and that are winding down their non-core operations, which are reducing that profitability somewhat. And so with housing starting to really recover, I think you're going to see dividends increase. I think you're going to see earnings increase, even in 1% to 2% GDP growth. And you're not going to find a lot of companies that are likely to grow their earnings and dividends as quickly as those companies will, despite that really low valuation that you're getting. So that's where we see opportunity is those companies. AIG is another one that we really like.
One of my old business partner works for AIG. I'm willing to set aside the fact that all of those banks should no longer be around had the free market worked.
Right.
But a Romney election is really good for every one of those names you just mentioned because that's who's backing his campaign.
Oh, without a doubt. And they backed the other side 4 years ago, and I agree. I think that one thing that you've had is you have interest rates which are basically nothing, and then you have the fiscal end that's really kind of gotten in people's ways, and they've really increased the capital constraints, and they've hurt the ability for banks to be able to lend as much to individuals and small businesses. And if they could, get out of the way there, I think that the economy would really see a boost there because you need you need to leverage up a little bit, and a lot of small businesses can't get the credit that they're looking for right now.
And why should they? Because with the system that's in place right now, Bernanke will create funds in these insolvent banks, and then they turn around and buy U.S. Treasuries with it. Why lend it out? And so it's if you can get money for free and buy U.S. government debt, then it's a good business model. And whether I like the system or dislike the system, Romney will be very good for the banks. They are backing Romney 100%. And, he said it wasn't a bailout. He looked at it as a rescue. He is the banker's boy this time around. And this policy that has transferred 40% of the American people's wealth to businesses that should have been allowed to fail will become the same system but on steroids under Mitt Romney, in my opinion. So I think your investment approach towards these financials is probably good.
Well, so if you think that he's going to win, I think it would definitely be favorable. I think that if he doesn't win, if it is Obama, I think that they've already seen some of the worst actions, and I think that it's likely to loosen up a little bit. I mean, at some point when this economy really, when the politicians really decide that they need to take off the handcuffs and let the economy grow, I think that they're going to realize they need to have clear regulations and let the banks do things like, give mortgages out to new home purchases. You're seeing tons of mortgage refis and credits available in that area, but you're not seeing originations on first-time home buyers or anything like that, and that's a huge problem. And once that really starts to progress, you're going to see housing pick up, in my opinion. I think it could exceed estimates.
Tim, tell us about your website. How do we get to you?
Sure. So our website's ttcapital, CAPITAL, online.com. And we offer investment advice and money management using that value investing individual stock picker approach.
ttcapitalonline.com.
That's it.
Tim Travis, ladies and gentlemen. Tim, it's been a pleasure.
Hey, thanks so much for having me. I appreciate it. Look forward to talking to you soon.
Well, we'll look forward to talking to you again as well. This is Alan Butler. I'd give you the market, but it's closed, so we'll be back in a couple minutes.